I've said it once, I'll say it again. Things take longer than I generally think they will, and today is no exception. So I want to pull up yesterday's chart drawings on the 15-minute time frame, and as you can see, I am expecting, or was expecting, a test of Friday's low, and then either a breakdown or a pull up, and we got neither. Instead, we had the morning dump, which did form that descending scallop that I was looking at yesterday, but we didn't get that upward move or that downward breakout. So what's that mean? It probably means it's going to happen tomorrow. You'll see this big dump here. I forecasted this dump and this pull up to happen on this day, but that's not what happened. Instead, we got this really tight trading range and this consolidation pattern, right? And that's basically where we are today. We have another consolidation pattern here. It's essentially the same. It's a pennant, although it does have the shape of a descending triangle. It's a pennant, and the breakout to the downside or to the upside will probably come tomorrow. And there's a couple of catalysts. Powell is going to be talking, I believe, tomorrow, and then we have the FOMC meeting notes being released on Wednesday. And so both of those are opportunities for catalyst event. I think that the volume that usually occurs when Powell speaks is bullish for AMC, and so we could see a pull back up into this pennant that I've drawn. It's in yellow, and I actually think I just decided that would be an ascending triangle because it is longer than 3 weeks to its apex from its beginning. And so tomorrow is going to be interesting. It wouldn't surprise me to see this lower target reached and then a big push up to the higher target. That just makes sense with how volatile the markets are. So I don't want to add anything here. I want to sit and wait. I am currently holding a 1350 call expiring June 10th. And I'm going to pull up my day trading chart here. I'll show you where I bought that. Let me switch my time frame here to the 1 minute. And we'll zoom out a little bit. Today's charting wasn't too messy because not much happened today, of course. Price opened, tanked, as expected, forming that second peak for the descending scallop. And then we moved into this pennant. It was very evenly shaped. And this is where I expected the price to break out and up. And you can see I actually bought the call right here on this green candle. And the reason why I did that was because there was a good potential here for a double bottom. You see the price comes down, curls up, drops back down to that same level, and consolidates. And I was thinking to myself, this looks like an even eve double bottom. And that pattern would confirm when the price rises above the intermediate peak here, which would have been closer to $12. And it's probably this 1209 level. But that is not necessarily where I want to be entering a position. There is an aggressive buy line. That's what this is. You just connect the top of the incoming downtrend to the intermediate peak in the double bottom, and that is going to signal where the buy line or the buy price is. And it was right here, and it broke out, and then it pulled right back down. Whoops. I decided to hold the call anyway. The price did drop, move list sideways, which was a little nerve-wracking, and then boom, boom. Kind of tested that level twice more. So I'm thinking that there is a lot of support here, but there is a gap to be filled that may happen tomorrow morning at open. That is possible, but I don't know. I think we're going to leave that gap behind. This really could be the corrective phase of a measured move down. That is to say, this would be leg 1, this would be a corrective phase 2, and then the price will spike and drop past that low, that level of support at around 1150, and then dump lower, possibly even to the same extent that it did on the way in, which would be very, very bearish. But I am still looking for bullish reversal, and that's why I'm holding a call. I'm going to open up the daily chart, and I'm going to show these candles that I was talking about that may form today. I was looking for tweezers, and I was reading up on Bukowski's website. Apparently he doesn't like tweezers, and that describes 2 daily candles where they essentially have tails that reach the same level, and it's like a miniature double bottom, right? And so basically I bought that trend line from this peak to today's intermediate high, and then did not see the bullish confirmation, but decided to hold anyway because I'm generally bullish still. You can see this gap zone is in pink. This still has to fill. It hasn't filled yet. I don't know when that's going to occur. I really hope that this isn't an island top and the price spills and dumps down lower. That's possible, but that's not what I'm looking for. So I am a little nervous though, because these are matching low candles. That's what this pattern is. And we scroll down on Bulkowski's webpage. He says, theoretically, it's supposed to be bullish reversal, but he tested it, and actually it was bearish continuation 61.8% of the time. So that's not great, right? Nonetheless, you'll recall that the descending scallop had a 78% chance of a downward breakout, and it didn't break down. Instead, it consolidated and then listed sideways and found support on that gap zone. So I'm seeing this as a rejection of downside action, and you see that in this kind of double bottom formation. I think this is inherently bullish. I really do. And it's possible we have a price mirror in here where the price is mirroring around somewhere in here. And of course, on the left side, the highs are higher than on the right side. But I do think we're going to see a big push up, back up towards the highs from last week. I think that's coming shortly. I think that the bearish sentiment is overstated and that SPY is actually looking pretty good. I've been following this descending broadening formation, and we had a nice little push up today, and it featured a diamond in here, and I was hoping that this would be a half staff formation. That looks a little better on the 1 minute chart. Let me just fix that and we'll pull this over. I was hoping to see this act as a half staff formation, which means we just take the first half and apply it to the second half, and we didn't get it. Instead, we had the price come bump up here twice. You can see this has the potential to form a double top, which is kind of nasty, but we did set a higher low before the day ended, so this could be another pennant, and that pennant could be a half staff formation in and of itself, and so we'll see that height applied to the top of that level. There is bullish potential here, especially seeing as the price pushed up over a downtrend. This is really important. Pushed up over a downtrend, came down and bounced. Okay, this is inherently bullish to me. This, though, does make me a little concerned. This topping pattern wouldn't have a very low price target. If anything, it's probably telling me that we're going to open tomorrow. We'll come down and we'll test this uptrend, and we'll see if it holds or not. And I'm not exactly sure how that's going to play out, but Powell does like to rally the markets, or I should say when he speaks, it does rally the markets. Yeah, that's a bunch of gobbledygook. Let me change my charts. Here we go. So this downtrend in SPY comes from the top of this descending broadening formation, and you can see that the price is moving towards it. This looks good. I'm really happy to see this, and this almost looks like bullish meeting lines. The volume wasn't necessarily all that high, but it is good to see the RSI is starting to turn up now, away from the oversold region. I like this. This is good. Tomorrow's going to be a signal day, I think. Whether or not the RSI continues to rise on SPY really could be a huge indicator for the market in general. Looking at IWM, you can also see we did have a push higher and a close higher. This isn't necessarily a very bullish candle, even though it is green, so that's a little disconcerting. I think the markets are just trying to be as confusing as possible. That's what it seems like. I'm not sure what that means. I really haven't had much experience analyzing the markets or stocks in this kind of environment before, so I'm a little out of my league. Of course, I have Bulkowski's ID guidelines and analysis to help me, and that's really all I have to rely on at this point. I want to say that it's very possible that the price could come back down and test that lower level, and who knows how many times before we see another breakout. Maybe we even see a double bottom form in here. There's just so many possibilities. So many possibilities. It really just depends on what happens tomorrow. Last week, I said this week was going to be a very important week, and that is so true. We could see a big push out and a huge rally, and that is ultimately what I want to see. And at that point in time, I'm going to be analyzing this as an ugly double bottom, and it's ugly because the two bottoms don't share the same price. And I would analyze it as an Eve and an Adam ugly double bottom. I hope that is the case. Now let's talk about AMC on the daily chart one more time. Okay, this looks bad. It does, but it'd make a beautiful bear trap. It'd make a beautiful bear trap to have this bounce. If tomorrow is a nice green day, right? Maybe we get pipe bottoms, and then maybe we completely reverse and rally. So maybe we get a late week rally. Maybe Tuesday is a little downward test. Maybe we even fill that gap down to there. Maybe we bounce, maybe we don't bounce, but I would like to see it bounce back higher and form a bullish hammer here. And if I can get that bullish hammer, which I'm not going to bother to draw very well, but, you know, there you go. You know what? Let's make it a bullish hammer. I mean, of course, this doesn't work. You can't draw candles on charts and then expect them to appear. That's not reality, but I'm just going to do this for the sake of demonstration. If I can grab it, if I can, okay, here we go. Let me just struggle here with my, if we can get a bullish hammer there, okay, that would be ideal, I think. This would be ideal. And then the FOMC meeting notes come out and they're better than expected, and maybe we get a bigger push higher. This is actually pretty fun. I'm gonna start doing this. I'm gonna start drawing these candles like this. Oh yeah, that would make me very happy. Would that make you very happy? That'd make me very happy. Yes, bullish reversal. This is what bullish reversal would look like at this point. I think that looks great. And then let's just get carried away with it. Let's just have some fun here. Oh yeah, nice. Nice, let's go straight to 16. All right, yeah, that would look nice. Wouldn't that be great? Jeez. That would make me really happy. That'd be a clean 1, 2, 3 measured move up higher, which would bring us back up to 16. And then from here, whether or not the price moves sideways or rallies, that would be for the future to tell and me to guess. And I want to say the RSI would be coming up a little bit on the first day. And on the second day, it would come up a bit more. And that third day of rally, that would really put us up here probably towards 55. And that would put us on a good course to reaching overbought. You see, this is this is actually exactly what I want to see. I don't want to like create hopium or anything, but I really am looking for this sort of a move to occur. And I think that it would be really cool also if the volume here were to like this is not analysis, this is me having fun. Maybe we get a little volume, and then we get more volume, and then we'd have like this massive volume spike here. Like that would be great. That'd be so great. And implied volatility, I imagine, would probably drop a little more before it would start to pick up again there. That's my ideal chart. That's what I'm looking for when I'm making these analyses. That's what I'm doing in my head as I'm trying to picture what this chart is going to look like in the future. And that's what the reversal would look like. Of course, that's so speculative. I'm just going to delete that. I shouldn't even be sharing that because it's like not even analysis. But I think tomorrow, going for a bullish hammer with a gap fill and a push higher off of Powell speaking, I think that's very realistic. I think having the RSI come back up to at least that 45 level by the middle of the week is pretty good. And then I don't think it's entirely inappropriate to say that the FOMC meeting notes won't be a catalyst event either. I think that things are better than they seem. And when people come to that realization, the markets are going to pop a little higher. And we're going to have a nice corrective bounce. And whenever that corrective bounce turns into a clean uptrend, that would be fantastic. I know that we're flirting with the edge of bear market territory on SPY, but I'm not scared. Not yet. So basically today I'm saying I'm looking for yesterday's forecast for today to play out tomorrow. And then last week's analysis and forecast for a run to 16 to happen later this week. That would fit the pattern of my analysis being a little too early. And I'm holding a call, a 1350 June 10th expiration call. And I'm just going to hold on to that. If there is downside, I'm going to be playing puts on the weeklies and hopefully trying to recover enough money there to at least recover the losses from holding this call, because I think I'm going to hold it. I'm going to try to play my puts smart enough to be able to pay for the call and then ride that call out. Of course, I won't hold it forever. I really don't want to hold it past the end of the week, but I also don't want to be just losing money. So maybe I hold a call at a further expiry and then play puts in the near term, because that's how I feel about the price of AMC right now and the markets in general. Short term, possibly short term bearish, but long term looking for recovery.